and others who know and understand it. I guess you could say, coming from the hedge fund side and the financial services industry, I kind of come from the dark side. But I'd like to be able to change that perception a little bit. About 8 years ago, I had an aha moment. Many of you may have had the same thing, or many of you have gotten it by different training. And that aha moment to me really changed my thinking with regard to investments, a new investment attitude, and a whole new investment approach. As part of our firm's overall investment approach, TerraVerde Capital, our research and due diligence process was altered. We started to understand the issues of global warming and climate change, and we kind of independently started to understand what environmental degradation was. And with our own capital, we launched a fund about 5.5 years ago. So why do I mention that, and why does that really have anything to do with anything? Well, firstly, my new understanding and decision-making process about greenhouse gas emissions and global degradation started to really influence my investment approach. And secondly, it led to my part-time job, my night job. And my night job, or my part-time job, is at Washington College. Washington College is located about 45 minutes from Annapolis on the Eastern Shore of Maryland. The college was founded in 1782 by its namesake, and it was the first school that was chartered after the Revolution. Liberal arts college of 1,500 students, has a very strong environmental science department, as well as a highly regarded business and finance department. 10 years ago, a former partner and managing partner of Alex Brown donated money to the school to start the then Alex Brown Student-Run Investment Fund to give Washington College students an edge in leading careers in the financial services industry. 4 years ago, I was asked by the head of the business department, as well as the CFO to the school, to see if I would serve as the external advisor to this student-run investment fund. And so I began a new career, my new gig at the college level. To me personally, it's been very rewarding seeing the progress that the students have made. We assumed control of a portfolio at that time that had about 50 positions in it, and over time have pruned it down to about 34 different names. Over time, the students have been asked to restructure the portfolio that reflects their risk tolerance as well as their individual investment views. So what do we do, and how do we do it? Entrance to the program. While the program is open to all students, we are somewhat selective. We have an interview process, we have an application process. Each student completes an application and a questionnaire, submits a resume, and then we interview the students. I and the head of the department and one of the business professors will then accept or reject the students. I will say that, Barbara, you mentioned yesterday, I think the Chatham rules, what stays here doesn't leave here. I'm going to give you some insider information, and please don't repeat it when you ever leave this room. We accept 100% of the students. Got that? We accept 100% of the students. When you have a school of 1,500 students, we want to really have critical mass in the school, and so it's very important for us to try and get the word out. Attendance? Well, we meet once a week, Wednesday mornings at 8 o'clock. I'll either drive down the night before from New York, drive down that morning. If I can't attend, we do it by Skype. And I have found that it's a very effective tool for the students, and the students really relish it, and the students really embrace it. There's also a dress code. As I told the students before we started the program, I said, in my world, this is the uniform. I want everybody in the class to wear the same uniform. And so what's interesting, on Wednesday morning, on the college campus at Washington College, everybody knows who's in the Alex Brown Student-Run Investment Fund, because all the guys have on suits, shirts, and ties, and the women who are in the program are appropriately dressed and look pretty good as well. The structure. What we've done is we break down the S&P 500, the 10 industry groups of the S&P 500, and each student or several students is assigned to one of the industry groups. Each student is assigned the title of analyst. We have one student who has been selected by the business department as the CIO, the more senior student, and we have two co-CIOs. So we think we have a good hierarchy for students to be able to learn. Please keep in mind that we're investing real money. The fund was originally funded with $500,000. Year-end assets were about $665,000. Haven't looked at it lately. I don't know what we've done in January, but I don't think we're really going to be very happy. When students come to class every week, they have a recommendation, either buy, sell, or hold individual positions, and they must be prepared to present a strong case for appropriate action and to be able to defend it. The other students will discuss the issues of each company, and at the conclusion, we're very democratic, we vote. However, I will say that my role is Dr. No. And you have to be able to convince me that what you're telling me and what you're telling your other students in the class is something that we really want to do. And so the students must have a well thought out methodology and thesis for each individual investment decision. All the students in our class are either business econ or finance majors, with a few liberal arts students as well. And it's interesting to note, we have several liberal arts students in the class who have said, I don't know anything about the stock market, I don't know anything about investing, but I'd like to be in this class. We welcome those students as well. It's interesting to note also we have two faculty members who are in the class because they are auditing the class. They want to participate in this learning experience certainly as well. We also, and I'll borrow a term, intentionally designed get off track. And when we do that, we intentionally get off track to discuss jobs, interviews, and approaches for interviews. We talk about resumes as well as the use of social media to get a job or not, how it can hurt. So back to my aha moment again. As I began to understand the issues of global warming, climate change, I wondered how I could integrate a climate science into a college-run portfolio management process. The good news about sustainable investing at the college level, and frankly, I didn't have to do much. The students were already very well tuned in, and all they needed was some encouragement and support. When I inherited the portfolio, we had positions of Amerada Hess, ExxonMobil, we'll beat them up a little bit more, Chevron, as well as a Latin America mining company. Over time, the suggestions of the students was that they wanted the portfolio to be fossil fuel free. And again, I give credit, it wasn't me, it was the students. They know it, they understand it, they get the joke, and what I did was provide a mechanism for them, a support system for them to do what they wanted to. Each week, we begin class with a review of the capital markets and financial current events. We look at what is taking place around the world, we evaluate trends, look at risk, look at opportunity, and then look at specific industries and specific companies to invest in. I'm going to do two quick case studies. Case study number one. 2 years ago, as the economy was coming out of the recession and banks were on the mend, students decided that they wanted to invest in some bank stocks and they wanted to add a couple names to the portfolio. Over a period of about 4 to 6 weeks or so, we looked at a wide universe of stocks and eventually narrowed it down to 3. At the end of the day, we bought a position in JP Morgan. JP Morgan was one of the 3 positions. So now let's fast forward to year-end 2014. In our weekly reviews, problems in the banking industry continued to make headline news, and the students evaluated all the company releases. One of the names that we had, JP Morgan, was obviously well regarded by many in the institutional community, but unfortunately, it was headline news, seems like almost on a daily basis. One of the students asked a question which led to a very long debate. That question was, how do we reward a company for bad behavior? When you look at nearly $30 billion in losses over the financial crisis and to current date, they were asking a question for which I had no answer. We sold the stock. It was up about 30% since we had originally purchased the position. Everybody felt good about it, and we moved on to the next thing. But again, it just sort of shows the sense of emotion and the sense of corporate governance issues that students today, at least at this college campus, are thinking about. Case study number 2. One of the students suggested looking at a local company, Hannon Armstrong. Don't know if any of you know it, a very sustainably oriented company. Trades on the New York Stock Exchange, and coincidentally, it's located in Annapolis, about 45 minutes from the campus. Hannon Armstrong is a specialty finance company that provides both debt and equity financing for sustainable infrastructure projects that increase efficiency. So as we started to talk about it, because I had familiarity with the company, I said, why don't we take a field trip? Let's go to Annapolis. Let's see if I can set up a meeting with management, the investor relations department. I think it would be great for the class. As college students would say, you know, I can't. I got hockey practice. I got lacrosse. We got a swim meet. I can't go. Okay. Let's try alternate plan B. Why don't I call the company and see if I can arrange for a conference call with investor relations? I did that. 2 days later, after several conversations, the investor relations department said, investor relations person said, how about if the president of the company comes on campus and makes a presentation to the students? That was a home run. We had 100% participation of the students. We had 25 students there. We had 7 faculty and admin names. We were just very, very happy. So in the end, there are a couple things that I would summarize with. One is this experience looking at performance of sustainable-oriented investments. One of the criticisms of sustainable investing is you just can't make money out of it. But as we've seen over the last day, it ain't true. Considering that this class meets once a week for 30 weeks, with a 6-week break at the end of the year, numerous holidays in between, and no portfolio activity from the end of May to the beginning of September, the portfolio was up 8% last year. Now, for those investment professionals who are here, the S&P was up 13%. Considering that we had a significant cash balance during the course of the year, ended the year at 10% cash, and as well that we met only once a week, I think the students did a pretty good job. Personally, I've found this experience to be very rewarding. Professionally, I'm excited to share my experience and my knowledge base with a group of students that I believe represents the next round of leaders who will at least be able to draw upon their experience of managing real dollars in a sustainably oriented format. Thank you.